Hey everyone, welcome to Intellect Insight. You know I'm all about that compound interest life, but there's a side to compound interest that doesn't get enough attention, the risks. So buckle up, hit that subscribe button, and let's talk about the risks of compound interest and how to avoid them. Compound interest is your best friend when investing, but your worst enemy in debt. If you're paying 20% interest on a credit card, that debt snowballs out of control. That's compound interest working against you. Before investing, get rid of high-interest debt like credit cards and payday loans. Trust me on this one. Now let's talk about another sneaky risk, inflation. Even with a decent return, inflation silently chips away at your purchasing power. Aim for investments that can outpace inflation over the long term. Now let's talk about the stock market, the ultimate roller coaster ride. Compound interest thrives on consistency, but the market is anything but consistent. Diversification is key. Spread your investments across different asset classes. That way, if one area takes a hit, your entire portfolio doesn't go down with it. Stay diversified to manage market volatility. Let's talk about liquidity, which is how easy it is to access your money. Some investments, like real estate, can tie up your cash for years. That's why it's important to have a solid emergency fund in place. Aim for at least 3 to 6 months' worth of living expenses in a high-yield savings account. This ensures you can access your cash quickly without touching long-term investments. The tax man cometh. Taxes on investment earnings. Compound interest doesn't make you immune to taxes. Interest earned on a savings account is taxed as ordinary income, and capital gains taxes apply to stock profits. Minimize your tax burden by investing in tax-advantaged accounts like a Roth IRA or a 401k. Keeping it real. Avoiding unrealistic expectations. It's tempting to get caught up in the hype of compound interest. Instead of chasing unrealistic returns, focus on saving consistently, investing intelligently, and staying the course. Remember, slow and steady wins the race. Too good to be true, beware of investment scams. Unfortunately, there are people who will try to take advantage of your desire to build wealth. If it sounds too good to be true, it probably is. Do your research before investing a single dollar. If you're ever unsure, reach out to a financial advisor. Proceed with caution. Mastering the power of compound interest. Compound interest is a powerful tool for building wealth, but it needs to be used responsibly. Stay informed, stay disciplined, and most importantly, stay invested. Thanks for watching, and I'll see you in the next one.